Happy Thursday. Welcome to the Rick Helps Real Estate Show. And we have Jessica back with us. And with any luck, just like last week, maybe Pat will, fall off again and just be you and me. So
Yeah, I'm at the office today, so hopefully we get better connection.
it was a cluster last week. I had all kinds of connection problems. I'd be talking along and I'd see this little line wiggle around. But we're going to go over some rental stuff today. People are always asking us about where we are with rentals. And I finally got numbers worth looking at. And I did see a video by Ken McElroy. He's a very prominent real estate investor around the country, and especially in Phoenix. And he shared some interesting numbers about downtown Phoenix, where they've clearly overbuilt. And just so I want to share some of that here with everybody. The MLS doesn't really show you a lot of rental data because a lot of people just don't go through the MLS. The large apartment complexes, the private investors, they don't. So, but we're seeing. I don't want to say we're seeing bargains there, but we're seeing some lower prices. And here's the first thing I pulled up to look at, which is multifamily permits annual counts, and you can see that in 22 and 23, these are the permits. And when are these coming on board? Today. So, it takes a couple of years from permit to move in. And so there's year to date, they really dropped off in 2024, but these are still coming on board here. So, and then if you look and you pull out and say, okay, well, where did most of this happen? Let's take a look at Phoenix. And I'm going to try and get rid of all here and go down to Phoenix. And you can see that they had 10,000 and 10,000 there for a number of permits for multifamily homes. And then Chandler, not much, past you because they're running out of land. But Gilbert, on the other hand, had quite a few in 2024. So those are just starting to come on board. So now that we see all these apartment complexes coming on board, what's it mean? Well, check this out. The first thing you start to see before you see prices coming down are incentives such as this. Look at that, 2 months free. I'll pull out my handy dandy magnifying glass so you can see that. 2 months free. These are Gilbert. This one down here, 1 month free. And it goes on and on looking at these apartments. This one has specials, 2 months free, 2 months free, 1 month free. And they're just about everywhere. But it's also, nobody builds your basic apartment anymore. They're luxury.
Mm-hmm.
There's a big complex by Agritopia. You know the one I'm talking about, Jessica? It's on the north side of, I think, is that Ray Road? And a
Yep.
big complex with all the stores and everything underneath it. Well, they're expensive as all get out. And they're building the place across the street. Well, it's now starting to get occupied. People are leaving the expensive one and saving $200 by crossing the street. So, people out there kind of trying to do a little bargain hunting. But then you go to downtown Phoenix. This one is Broadstone on 7th Street, and it says lease today and receive 8 weeks free plus $1,000 off. Now, I don't know if the $1,000 off isn't on your base rent, but even that said, studios starting at $1,669. Ouch. $1,485 in base rent and $184 in monthly fees. You just want a standard one bedroom, you are $1,700, $1,780. But they're kind of tossing some stuff at you to get you in there, and so that's going to have to remain. That's their first line of attack. Then you're going to start seeing prices come down, possibly. This is an interesting chart that came out this morning from the Cromford Report, monthly average sales price per square foot. And they're explaining it. It's dipping down. And what they said here, it's across all areas and all types. A decline of 9.2% over 4 months is no doubt helping keeping buyers happy, but not so welcome news for sellers. But it said, however, more than half the decline is caused by high-end homes selling in fewer numbers. July, they did the first half of, in July than they did the first half of the year. For example, we saw 110 closed sales during March that were priced over 3 million, whereas in July we've only recorded 26. So the more higher end homes that sold, the higher the average price per square foot. The monthly median sales price peaked at 465,000 in mid-March and has fallen to 445 today. This is only a 4.3% decline, and because the median is barely affected by luxury homes, it's more representative of the weakness of pricing in the general market. Given that March is the middle of peak season, July is the middle of summer, it's not an alarming decline, just normal workings of a buyer market. So it is definitely a buyer's market out there, but the wheels aren't falling off the wagon. But down 4% it's nothing to sneeze at. Active listings, told you they were going to go down,
Yep.
and they're going to go down again next week. They're going to go down to about here. And that's because I'm looking at my 7-day moving average, and you can see we've got the black line is the number of new contracts, and the yellow bar area here is new listings. And so we're back up to 2,700, which is still painstakingly low for contracts, but we don't have new listings outpacing the new contracts. And that's why I can say with confidence that next week will be lower. But take a look at this. This is listings under contract. Just absolutely mirrors last year. I mean, there's just a
It's
1 hour
amazing.
difference, except maybe these 2 weeks here. It's just, how slow is it this year? Well, just like last year.
Well, I mean, what's kind of funny, Rick, is that you and I have kind of said that the last year and a half. Beginning of 25, you said probably more of the same.
I don't think you can even get anything more of the same than this.
Yeah.
The only difference that I'm seeing, and Jessica, you're probably seeing it too, is at the end of the month, the first of every month, we're seeing a hell of a lot more expired listings than we did last year. People are,
Yeah, absolutely.
yeah, didn't work, come out.
Didn't last year in August we had the interest rate increase though. So considering that factor, I don't think it's going to be much different because everybody was waiting for interest rates to go down. Then they went up. Wasn't it spot on 1st of August last year? It went back up to like 7.5. And then we waited for our elections.
Whole lot of waiting going on out there.
Yeah.
That's what I'm seeing. When you see articles that said that we have a lot of new listings, we really don't. This is new listings year to date, 62,000 versus last year, 56. So 6,000 more new listings at our market where we average 25,000, on a weekly basis. 25,000 total, but that's that isn't quite a headline. There was a lot of chit chat that listings were going to fly through the roof this summer. And it's like, why? Just joined from Northern California. Welcome, welcome. Thanks for watching Airborne 2. So, hey, up on the top, I've built this thing called a data store. It's not that complicated, just a landing page. You see that QR code up in the corner there? If you scan that, it's going to take you to, I'll show you on my phone. If you scan that, it'll take you to this thing here called the data store. So you get to put in, if you want a report just on your zip code, you just enter your zip code on this thing and submit. If you want a total market report or even a market report for several different areas, you can put that in. If you want a mortgage rate report, you can fill that out, or if you want all three. And then there's a comment section in the bottom there. If you want any other special data, you can enter that. So take a look at it. Tell me what you think. I've sent out about 40 of them so far, and they get good review. I get the information, then I got to put it together. So sometimes I get to it right away. Sometimes I don't. This is a little bit easier to see. I can show you on this. This is what it looks like. So you can put your zip code here, and you can enter market report. And when you do that, it just sends me the information, says, here's what I'm looking for. So, Pat, we didn't get any wild moves again this week. It's just another lovely snooze fest when it comes to the bond market, huh?
So that is my call. That's my cue to come up, right? To start
Yes.
talking.
Yeah. Well, you can sleep through it if you want. You haven't
Yeah.
shared your screen yet.
I get so enamored with your data that you just mesmerize the hell out of me.
I put a lot of people to sleep with that stuff.
Yeah, I mean, throughout my screen, I mean, we have seen.
Well, you haven't shared it, so I
Oh
can't throw it up.
Jesus! Oh man, yeah.
You know, Jessica, I try. You feel like doing that?
Man, screen share. I thought I did that at the beginning.
I
My
thought you did,
bad.
but for some reason it's gone. I don't know what it is.
Yeah, my bad. I
So
felt we were just talking before the show. No, yeah, it has been pretty much a snooze fest the last today. I mean, the mortgage back 5.5% coupon, the one that I've been watching has been down 0.05%. I mean, jobless claims, jobless jobless claims was the most important report that came out, but basically nothing really there. I mean, if you spread this out. These have been the rates, the prices on rates. Obviously, this is inverse to rates, but pretty much lines up. I mean, it's been pretty much just a standard up in this channel the last 6 months. Up, you know, rates go down. When it's at the highest point, this is the lowest point where rates are lowest. But they just been up and down the last 6 months. You spread it out. I spread it out the last year. You know, we had a obviously this little refi boom right here. This goes to show you that if something does happen September, October, which I've been kind of clamoring about, back last September, you had about a week and a half to 10, about 10 days, 11 days to get locked in at a little bit lower rate than we are. I mean, there was maybe low, 6 and 3/8, six and a quarter, 6 and 3/8, but then it just vanished right away quickly. So we've just been in these little spurts, weekly 2 to 4 week spurts going over the last year. But I mean, Bessent, I mean, I kind of listened to some of the news, business news. Bessent, the secretary, Treasury Secretary, he said that he was talking about the T bills, how China is probably going to slowly divest the T bills, but he feels that the crypto market is going to increase demand for T bills globally. And he, I guess, stated the fact that tariffs are creating like onshoring, bringing jobs back here. He's, suspecting maybe 1 to 2 cuts possibly um, this year. But we're seeing that the tariffs really are just not to be inflationary.
I don't know
So
what to think about the demand for treasury bills, whether or not, we have to issue so many now and, our rates, will they have room to come down? It just, everything I read and see is just very confusing. And
oh yeah,
I think if, I mean, Jessica, let me know what you think, but I think, let's say that rates went down to 6.2 in October. I think Pat will see a refinancing boost, but I don't think people are going to be getting in the cars.
I'm going to agree with that. We're already seeing the pullback right now with interest rates the way they are, and just because of uncertainty. Pinal County, and maybe we can show a little bit of Pinal County before the end. I've been out there for the last 2 weeks, and there's 60 homes that fit the client's criteria, and you've got sellers 60. I know that fit, and this is between 350,000 to 400,000. It's only a 50,000. Well, what? There's 60 homes up to 400,000 that fit their criteria, and
Wow.
out of those homes, most sellers have been on the market for 30 plus days, minimal price reductions. Everything that's sold, the few that have sold, are all below the average price per square foot. So, I mean, it's starting. We're starting to see it in the appraisals now. We're starting to see where that pullback, that 10% pullback is. So I think the buyers that are out there that are searching right now actively are seeing that, and an interest rate isn't, even if a little dip in an interest rate isn't going to ensure that they're comfortable moving forward. I don't know. I could be.
Well,
That's kind of.
I think if rates go down, let's say they go down to 6.1 in September, or October, you know, I, I don't think that's enough because buyers are not comfortable with the prices being down as much as they are, that they aren't where they want. I mean, you just look at this channel, everybody's telling me 30%. I don't know where they picked this 30%. Price need to come down 30%. It's like, what was there a newsletter that went out?
Yeah.
Everybody's got that number, or they say 50 to 60%. Well, if we go down 60%, it's party over for everything. So
Oh,
like,
yeah.
I mean, just, hey, if you get that, I hope you still get to keep your job. But I think, so, they're waiting for that. I don't think 6.1 is going to do it.
No.
I think it'll get, I mean, I'm going to be counterpoint, the old Saturday Night Live. I don't want to get too, Jane, you.
I can be that.
Yeah. 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 I'm in the office today. So the Badger stuff doesn't come. I got to actually decorate my office here in Gilbert. Maybe I'll put some Badger stuff in the back just to shake people up a little
Yeah, and
bit.
then we'll work on your camera so that it can actually read what your shirt says instead of it being a mirror image.
Yeah,
So,
exactly. But no, I think six. I mean, I really believe low sixes will. Once again, if you get the prices, I think it's gonna draw some people up. That's for sure. I mean, it's because then you get the 2-1 buy down. You get a 2-1 buy down. Once again, the popular uh, program that people have been doing. I mean, you get in the fours, or if you can do a 1-1 buy down where you get a 6-1, you get 2 years with 5.1. So I don't know. I mean,
well, 6.1 isn't going to be enough for sellers to go in and give it a second run.
yeah, yeah.
And I think,
I think it'll stir up the mud.
we've seen that 4.99 is very attractive. So we know that number works
Yeah.
because that's what the new builders are offering. But I don't see that happening. So I just think I think the hesitancy that we have out there is that takes a while to shake out. Now we've been in the doldrums here for a long time,
Yeah.
and now we've gone, okay. Buyers they're waiting, they're anticipating that there's going to be some improvement down the road, and sellers are like, man, I gave it the old college try. I'm a little pissed off at how the market is right now, so I'm going to wait.
Yeah.
And I don't think those two forces really change direction in a few months. I think it's going to take a little bit longer than that. Are you seeing any additional stuff, Jessica, that builders are throwing out there? Well, I mean, we can see what they're doing on rentals, but
No, it's about the same as it's been. They're not flexing on the price. In fact, I think it's great for those that have bought in the last year because they've been under contract, and it'd be devastating to most of those contracts that were in place if they did something to price. So the only thing we're seeing is the houses that are already built and the houses that they want to push off their books. They are doing some creative financing on. And when I say creative, they're throwing the 2.99, and again, it's just throwing money at the loan to get it more affordable.
Do you think that puts somebody in a bad, because you've heard of some people that lately that bought a couple years ago, now they're trying to sell and they're getting kind of, ramrodded, for lack of a better term.
And I don't want to alarm anyone, but I have ran into short sales. I've ran into not many, less than 1% of my clients that did buy, and they're having to make changes in life, and they are either going to have to come out of pocket or consider a short sale if they choose to make a switch in the market right now. And a lot of that, depending on
I think anytime when you end up in a situation where you have to sell within a 2-year window, it's always going to be a problem unless you have this great big acceleration of value.
Yeah.
And that's what we've had. That's what we've had. And so, pulling back to this is reality. It isn't 2020 anymore, 2021, 2022. We're back in a normal market. And you got to buy and hold for 3 to 5 years. And if you do that, you're going to be just fine.
Like Rick and you and I were discussing last week, it kind of goes back to my theory. You look at the data turns into trends, and trends turn into psychology. I mean, we're kind of in a psychological market right now with buyers and sellers now, right? Would you say they're taking all this data and they're trying to psychologically, do something? Does that make sense?
Yeah, yeah, I think psychology is a big part of it. No one here says you guys need to review net demographics, too focused on supply and not demand. I just think that's such a slow moving train. No one, I mean, when you demographics, I get it, but it's even slower than what we're talking about here.
Yeah.
And, so, baby boomers are aging and then the next wave comes in and the next one. That's a slow moving train.
Oh
I
God.
mean, look and think about it. Just think about, like, and you brought this up one time, Pat, just tastes in music is a slow moving train.
Yeah.
It went from Elvis to eventually the Beatles. And then, it's so demographics, it's a real number. I get it. Populations change. Japan went through it. Japan went through it for a couple decades now, if not 30 years,
Yeah.
because nobody was having kids. And they aged out. So it can happen, but if I'm looking at analyzing our market and today's market for people who are trying to get in today, I don't think people look that far out.
Well, jeepers, you can with the new data with the computers, everybody can pull up information on this or that. You get the Crawford report. I've got data that I pull up, different things. You can look at any one snapshot of any number and say, okay, the market's going to go to hell in a handbasket because of this number. You can get so lost in numbers, it's paralysis by analysis. Yeah.
Well, I can also pull and look at some stuff I can do a very good job of convincing you that because of our debt and because of there's different ways to finance the debt, that we could see another huge rise in asset prices. Now, how long will that last? I don't know, but I could make the argument. So I
Yeah.
think when I look and see the prices are going down, I've also got the little guy on this shoulder going, well, they might go up too. Just you just you just don't know. And then we talked earlier about this. We've talked about this a few times, and I know people were kind of hammering me on it, which is okay. I don't mind that. But
You got thick skin.
Trump says he's thinking about nixing capital gains tax on home sales. What do you think of that, huh? I think he watched our show.
Yeah.
Finally listening.
Yeah, yeah. I mean, last time we wrote a handwritten letter to Chairman Powell, he lowered rates. But my argument was, what's the point of capital gains taxes on real estate? And if we're looking for more inventory, how many people out there are holding on to all their equity because they just don't want to send a check to Uncle Sam? Maybe the number's way smaller than I think. But and then is he proposing this to just say this is for mom and pop that own their house that have a lot of equity and they want to be able to sell? Because now after 2 years, if you're single, you get 250,000 where you don't have to pay capital gains tax, and you get 500,000 for a married couple. Well, some people got 800,000. So do you want to get taxed on that 300K? If you are, you're probably not going to sell your house. So I did some digging, and we collect $250 billion a year in capital gains taxes for the Treasury. The estimate, because the IRS doesn't separate it, the estimate is that capital gains taxes from real estate is only around 50 billion.
Yeah, that number blew me away when you mentioned that. That it just seems like it would be a hell of a lot bigger.
You're gonna need a magnifying glass to find that on the federal income sheet. Where's that excise? Where's that tax coming from?
I do that
We
with my
spend that
checking
much
account.
money studying the sex life of a puffer fish. I mean, I think we pay taxes so much on so many things. Why are you dinging me if the value of my home went up? What's the point? It's like the death tax. I don't like that one either.
Yeah.
I have a farm. I want to be able to give it to my kids so it could still be a family farm. You can't, because you hand them the farm. Oh, you're just handing them a big tax bill. They got to sell the farm.
Well,
So
at
I
least
think real estate needs a break, I think, on that. And what if he did that for investors?
I don't know if he would do. I think
I don't think he
I
would.
thought I read something that they were going to exempt just first, mom and pop home buyers, and
Yeah, yeah.
and leave the investors, to another game. That's what it seems like. So yeah, I just
Well,
want to give a shout out to Kelly. Kelly, the one comment, she goes, loves this channel. She's always been a great. She's been watching our show for some time. Kelly, she's
yeah.
an agent. She's a great agent in Tempe.
I had a lot of agents watching and reach out this week, asking me for reports and stuff. It's kind of funny. So it's
We're here to help any way we can.
we're just one big happy family.
Exactly.
So Jessica, as we go forward here, I mean, we're more of the same. But are you sensing that? Because I'm not, that sellers are kind of starting to bend a little bit more when it comes to lowering their price or offering more concessions, or is it kind of status quo of what it's been the past 3 months?
It just depends on the client. No, I do. I think
Well, that was
if they want to
America's you can
sell,
get answer.
yeah, if they want to sell and we're educating them, they realize that they've got to give somehow. I mean, it's no different than a builder throwing great interest rates and, you know, in closing cost incentives. Um, your data's backed that up on every offer we've made all summer long. There's closing costs on it, whether they need them or not. And we're typically getting a price reduction or closing costs. So that's the trend. And it's not unreal. I mean, if you're unrealistic, I've had plenty of offers that are unrealistic turned down, and I could see the seller side, but I can see the buyer side too. If there's 60 homes to choose from, hey, why not make an offer on
Yeah. If you're up against 60 homes that are, you know, it's going to have to be really unique at this point. And
right?
people go,
Oh,
"Oh, I
exactly.
remodeled my kitchen." Well, so did 45 other people. I mean, that's real estate, and I've been on that, side of the fence where you just, my house has this, my house. Yes,
We
yes.
get it.
Are you listing to list, or are you listing to sell? And so, what I like what you've done, Jessica, is you said, well, let's get in the car and let's go see what's for sale in your neighborhood. And and that's a great way to, let's spend a few hours and let's just make some appointments and go see what's for sale. And that's an eye opener, because just getting on Zillow and stuff, and
It's the
now we've
lens you look through, right? If you're a buyer, you're looking through one lens. If you're a seller, you're looking through another lens. So it's definitely helps put it into perspective when you put yourself in the buyer's shoes and get in the car and see 10 houses and go, okay, mine maybe isn't worth. Like, well, not saying that it wasn't, but you got to make that choice, not me.
yeah, we go in and make listing appointments and say, now in 30 days, if we're still kind of sitting here, we'll need to make a price adjustment. And they always go, oh yeah, of course. Well, day 29, you're talking about it, and they like, nope, stand put.
What if? What if?
I'm not just gonna. One stat that I talked about this week that I saw, that was an article that was out there, a news story, that I didn't agree with, said that we have the highest number of cash cancellations nationally, because buyers are backing out. Cancellations don't just mean that buyers are backing out. Cancellations are, well, we didn't meet the appraisal price, we couldn't come to terms, or I couldn't get the financing, or the seller had it listed and said, you know what, I'm just going to cancel it. And in a lot of cases I'm seeing in the cancellations, they're canceling and picking up another agent. So you'll see a house has been listed for 140 days, says time on market 140 days, agent days on market 1. And I look and I go, oh, they changed realtors. So, but they're looking at the number of cancels that we have. Well, the number of cancels we have almost match back on market. We have, on average, 800 cancels over a 7-day period, and on average, 800 homes go back on market. So there's a lot of just transferring, like,
Back and forth.
Just
Yeah.
strategy, right? Well,
I mean, overall, you just got to say that this market's recalibrating. Overall, I mean, we're definitely in a different market. Look at the last 5 years where we've been. 2021, we had this pandemonium, just this craziness. The rates went up, and January 22, and we saw a slowdown. People were recalibrating back in 22. Rates going from 3.5 to 7, and it's just been a recalibration period the last year and a half, 2 years. That's why we're seeing the stagnation. Like I said, if I was to come on the show every week, and once again I talk about our rates being in the high sixes. They've been there. It seems like they have been there like the last 25 years.
Yeah.
I mean, it's like but I just, my personal feeling is, they're something will change. I mean, that's my take on it. That we're going to see a little bit of movement. It's not going to be this overflow, but I think September, October, once we get to past the tariff talk, the bill, we got the people are going to know what really is going to happen for the tariffs and the effect on inflation. Once again, the people are coming out saying inflation it's not as inflationary. And we got also the feds. I think the feds will finally they've been stuck in this wait and see mode forever too. So everybody's once again, like we talked about the last couple of weeks, everybody's been kind of sitting in this wait and see mode. But eventually, I think that wait and see mode, something will shift a little bit. It'll start shifting a little bit.
I don't think, and what the Fed's looking at, what the Treasury's looking at, it's not just real estate centered. We've got that interest on the debt that's really dragging us down. And so they're all wringing their hands trying to figure out how we're going to unwind from all this, lower their balance sheet. The Treasury's trying to figure out how to refinance because, a lot of the stuff was borrowed in 2 years, right? 2-year notes.
Yeah.
So at like 0.1%, now it's going to recalibrate to 4.5. So that's going to make the interest on the debt go up. So they're not looking at real estate. They're looking at that.
Well, they're looking at that, but it's going to have an effect on real estate. Obviously.
It will have an effect, but I think, and that's why I say I can make the argument that real estate will start climbing back up again because they're going to try and fix this. And, sorry, we reinflated that, but we had to fix this.
Yeah.
And so, I mean, that's what, I'm not saying whether I like Chairman Powell or I don't like him. I think he's going to be a non-event. I think the Treasury Secretary is the one you really got to watch and listen to right now because they're working in the background doing all kinds of things. And
I think, he's the key guy. He's the Fed, Powell. Yeah, he's kind of I totally agree. I think he's a non-event. I think Bessent is doing some things behind the scenes to kind of tighten things up a little bit.
And unless you follow that, you don't know.
No.
The average buyer out there isn't waking up in the morning and go, well, let's see what Bessent did. So,
except you and me.
Yeah, we have no life. I was obsessed with with Open Doors stock this week.
Yeah, we know.
So, it retraced, but
you did make some money on the leaps that I told you to start playing around the leaps.
Well, they went? Their stock was 58 cents. They were almost delisted. So I bought that leap. Thought I'm going to wait. Somebody's going to buy them, right? Well, here comes this meme stock guy that predicted that Carvana was going to go up. So he put a bunch of money into it. He said, this is going to be worth $82 a share. And there were all these shorts on it. And it shot up from 58 cents to $4.79. And within 20 minutes, it went back down to like $2.99. And today it kind of went up a little bit. But it's wild.
Yeah.
But there's no financial reason for the stock to go up. They're still losing money.
Yeah.
They're not attractive for anybody to buy. And remember, they were the iBuyers. They won't need realtors. Guess what their new business model is? They need realtors. They need Jessica to go out and show the home. They need Jessica to bring them sellers. So they went from, you know what? We're going to put this key box on. People can open with their phone, but we don't need you, to now going, can you help?
Dude, you forgot the other piece, the financing piece. What about me?
Yeah, well, they have their own lender.
Yeah.
They have their own title company.
Yeah, good luck on that one.
So, so it's not working out so well. Janet Yellen failed to refinance the U.S. debt when interest rates were zero or very low, paying the price for past sins. I agree.
She could have refinanced a ton of debt at a lot of low rates if she would gone longer term on the refinance.
She was saying borrow because money's free. And, and we
She wasn't the sharpest tool in the shed, I can tell you that. Not to get political, but
what's the name? Stupid is as stupid does. Here's our canceled listings. 607. That's what it shows last week. I actually show higher numbers than that if I go through the MLS and look at it. But it just, it's amazing when you look at, like I showed you that number from this year to last year, how they just match everything. How when you actually input the numbers in the morning and you look and go, wow, that only changed by 5. Over 7-day moving average. That this one only went up by 10, so she'll turn 79 in August. Well, she's out of the picture, so
Yeah.
um, I don't want to pick on anybody in their 70s. I can't do that anymore.
So
So, well, I will not be on the show next week. That's my first day on the leg of my trip, my summer trip. I'm gonna head up and go back home, Washington State, staying in Sequim, Washington. Going to be up there for a while, but I will still be here. I'm just going to miss Thursday.
yeah,
So
the whole show is going to shut down because Rick's gone. Ooh,
yeah, I know. It's just
God, we're so tethered to you. I don't know how. We're so connected
well,
now.
there's millions and millions of viewers. I mean, we got
But
17 million right
next,
now.
yep. Next week we're going to see some interesting. We got. I mean, next week in terms of the rates. I mean, we're probably going to see some movement. We got the JOLTS, the job opening and labor turnover number coming out Tuesday. Wednesday we got the ADP number jobs report. Federal Reserve's going to make their decision on Wednesday. Get the PCE coming out on Thursday. So we're probably going to see some movement. But once again, going back to last year, how many times have people said, "Oh, waiting for this big PCE and all these numbers," and it's kind of like a big nothing burger. I mean,
Big snooze
stuck in
fest.
its range. So
Well, Jessica, it was good to have you on the show again.
Yeah, good to see you guys. Thanks for having
thanks.
me.
I kind of made a veiled promise that Pat would drop off, but that didn't happen. So we will see everybody not next week,
Thanks
but
for
the week after that.
thanks for coming on, everybody.
All right, see ya.
Yep.
Yeah.